Gold has now risen to 100 times its previously fixed price of 35 US dollars per ounce. Could this be a psychological milestone signaling a correction ahead, or is there still more upside potential to come? And under the Gold Reserve Act in 1934, gold was officially priced at $35, a rate maintained for decades until 1971, when President Nixon suspended the dollar's convertibility into gold, and that effectively ended the gold standard. This historical move, also known as the Nixon shock, allowed the gold to trade freely in the market, and by the same year, at the end of it, the gold has climbed to around $43 to $44 per ounce. So why has gold risen from 35 US dollars to currently 3,500 US dollars? My name is Con Hao. My work in this channel is to study behavior science and finance, discover the correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. So please consult your licensed broker before investing. Gold is widely recognized as a hedge against inflation, but in reality, it has proven to be more than that. Now let's work this equation out. Let's consider this: if inflation had compounded at a target rate of 2% per annum since 1971, so the goal today should be 102, including the compounded interest. But with 3005, if we're going to work backward, this also implies that the compounded annual growth since 1971, it should be 8.9%, and that's outstanding. So what explains this outperformance? One key driver is the expansion of money supply, especially through debt, and more critically, debt financed by money printing. And periods of high inflation can be preceded by an unjustified increase in money supply that is not quite backed by a corresponding income or production output. And let's look at this chart here. In 2018, we saw that the beginning of Trump's tariff 1.0, and since the anticipation of Trump 2.0, I've incorporated this framework called the QTD matrix, which stands for quantitative easing, tariffs, and debt, to track the trajectory of gold. As long as we continue to see, let's take a look at this, which is the central bank deploying quantitative easing during the next crisis, or the ongoing of the escalation of the tariff war, or maybe the persistence of the growth in national debt, it is reasonable to expect that gold remain firm, potentially breaking into new high. Now let's look at the gold versus QE. Let's study into this to understand what happened at every major milestone. And each major wave of QE has triggered a significant rally in the gold. And we can see that the Japanese QE in 2001, we saw how gold has rallied. And how about in the US QE 1, 2, and 3, following by the 08 crisis? And we saw that how gold have rallied after that. With quantitative tightening, the gold come ease off. But once again in 2020, and we all know that there's this massive COVID QE program, and we also saw how gold have rallied after that. So the next question is, the next crisis, will the central bank continue to deploy the QE? Now let's look at the other study here, which is the Q and T right now, the gold versus tariff. When Trump tariff 1.0 was announced in August 2018, we saw that gold pivoted on the very day itself and began trending higher. And during October, when Biden's have this export control and advanced chip act as a tariff equivalent event, so once again, we saw how gold has pivoted on the same day itself. From there, it started to trend up. So after Trump re-elected in November last year, market began pricing tariff 2.0, and we also saw how gold has pivoted and now is much higher. And finally, gold versus debt. Gold has also moved in close tandem with the rising debt over the years, as we can see. Now, as of now, I believe that the Q, the T, and the D will remain in play. So therefore, it is reasonable to expect the cost of living to remain elevated, inflation pressure to persist, and gold prices to continue their long-term uptrend. That said, I'm also noticing some technical and psychological resistance in the midterm as it reached 3005. And what we're seeing here is the quarterly chart. So once I have identified the this uptrend line, as we could see here, so always start with this bottom here. Identify where the uptrend line is. Then I would like to mirror this to its significant peak. Look out for a significant peak. And I could see that all the way back to the 80s, a period of high inflation. I place it there, and which appear that it intersect with this psychological level, 35 to 3005. That's 100 times. And with this parallel channel, it kind of intersect. And there's a good reason. Technically, I believe that there's some psychological effect. Now let's look at the fundamental why I believe that in the short to mid-term, we're seeing some correction of gold. So now let's come to trade war. And currently on pause. So gold may temporarily take a breather. But as long as the QTD remains intact, which I believe so, it is a matter of time that the gold will test all this resistance and start to break higher again, especially break this 3005 one fine day, and is set on top of it, and gold may continue to this upward trajectory. So we should also ask this question: is there any possibility that the Q, T, or D could shift in the opposite direction, means coming down? So if so, that could be a positive sign for the equity market. I would like to hear your thoughts on this. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great trading weeks ahead.